Can you give us your observation on the phase of bull markets?
It's interesting, and this is nothing revolutionary, but we are always trying to learn, and we always try to listen to experts in the field and people that we really respect. And what we tend to see is bull markets, to us, it's our opinion that they have three phases. The first phase is when nobody wants to buy it, so to speak. The second phase is when we look at, and the only people that buy when there's blood on the streets, the famous saying, in our opinion, is the smart money with guts. The second phase is when institutions come in, major institutional investors like hedge funds, perhaps, or endowments, or countries come in, or super rich individuals come in. That's the second phase. And the third phase tends to be the mania, and that's when the public comes in. You can go all the way back to Holland in the tulip phase, where the price of tulips were going through the roof. You can, but to look at it more recently, and most Americans will remember this, in 1982, stocks were kind of a dirty word. The stock market had gotten beaten about. No one was buying stocks, but Peter Lynch around that time started Fidelity Magellan. And by the time that bull market ended in '99, it was, if you had put 10,000 in Magellan, you might have had somewhere around a million. But I bet not many people had the wherewithal to invest at that time. So phase one is when not many people are in, but when prices maybe are very good in that case. Phase two, let's look at the 80s, was, all of a sudden the stock market starts to rock and roll. You had a pullback in '87, but institutions started getting in. And phase three, let's just call it the tech bubble. You had crazy valuations with stocks. Everybody and their mother was getting in on it, and then you had a collapse and overpricing. You had a similar phenomena in real estate recently, but we believe now we are in a bull market. It's in commodities since 1999. So we tend to notice historically that you see a bull market in stocks and bonds for maybe 16 to 20 years, followed by a bear market in those same things for 16 to 20 years, but then tangible assets during that time do well, and then they sort of leapfrog each other in their bull-bear inverse relationship. So since 1999, we've seen commodity prices or tangible asset prices rise. All right, you've seen the price of gold go from maybe $260 an ounce to $1,600 plus an ounce. You've seen oil go from single-digit dollars per barrel to over $100 a barrel, or 90-some dollars a barrel. So in this bull market, we tend to notice nobody was getting involved but the brave and potentially very intelligent people who noticed this phenomena also. They were getting involved at that time. Then we believe we are in phase two now. You're starting to see, the richest man in Brazil buy a silver mine, or gold mine in Colombia. You're starting to see the University of Texas buy precious metals holdings for their endowment. You're starting to see commodities become more popular, investing in oil, etc. But we feel that phase three is not here yet. Phase three will be the mania in the tangible asset sector. So, yeah, that's the answer to your question.